Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Chewy. You know, I looked at this one. They got earnings tomorrow after the close. Down 50% so far in 2023. It's been under pressure. I don't get it, Andy. Are people just not having pets, or is competition too much? Are you guys showing any data that's reflective of this slide that we've seen in the stock?
Yeah, unfortunately we are. I think it's a multitude of factors. I think the COVID boom of, pet ownership has somewhat passed. But those pets are still there and they still need to be taken care of. I also think that there's a significant uptick in the competitive factors impacting Chewy, and we really see it in a multitude of data points at LikeFolio. The first of which, and I think the most important probably, is the web visits to Chewy.com and its affiliated websites. Those are down 7% year over year on a 30-day moving average. And that's just not the growth trajectory that investors have come to experience with this company. We got used to really high growth rates, really high positive growth rates in terms of web visits and the number of people visiting the site. And to see that go negative is certainly, a bummer for investors. But the other part of it is the bummer for the consumers, apparently, that's happening, because this relationship that Chewy has forged with FedEx seems to be backfiring on them. I think the delivery that FedEx is providing to its consumers or to Chewy customers is leaving a lot to be desired. We're seeing consumer happiness for Chewy taking a significant hit, down 7% year over year. When you compare it to some other peers in the pet business, now ranking near the bottom of the list, if not the bottom. And this was a company we used to see consistently at the top in terms of very, very high consumer happiness levels. And so, overall, I think Chewy's just kind of reversed course in a really negative way. Less people coming to the site, and those that are sticking with them, less happy with the experience. Is not where you want to be as, a former darling growth stock.
Andy, so growth stagnating, competition heating up, and we look at the happiness. The one thing that Chewy could say, at least in reference to its main competitor, I would say, which is Amazon, is that the experience felt personal. Although they have like 20 million active users or active customers, you would get handwritten notes for your dog's birthday, for example. Little things like that go a long ways for making you want to shop somewhere. So are they losing their way, or is it, as you mentioned, maybe FedEx negatively impacting that experience? Or with all that we've read about the consumer getting a little bit more stressed and having to make tough decisions, does it get to a point where, hey, the handwritten notes are nice, but Amazon or something else is cheaper?
Yeah, I think that Chewy still is doing a fantastic job of what they can control in terms of that personal touch with the consumer. We see that time and time again. I don't think that experience is degraded at all. I do think that a lot of it's shipping. And then the other concern, that we're seeing pop up, and it goes straight to your point about people getting squeezed, is that just last month in early November, we saw all-time highs in the number of people searching for, how do I cancel my Chewy auto ship membership? I mean, it's a real explosion in search volume, plus 800% versus normal levels. And I just think as people head into the holidays and they're looking to cut some cut some items out of the budget, the auto shipments from Chewy might not make sense. It might be one of those things that's pretty easy to cut off of the list. And I think that is a really negative sign for a company, because they count on that revenue. I think it's 76% of their revenue comes from auto shipments. And if you start to see a big increase in potential churn hitting the search engines, then that could be a really negative sign.
Yeah, that's unbelievable to me, that kind of data, because if you look at the total addressable market, Americans spent 136 billion on their pets last year in 2022. It's expected to grow 5% this year. Is that due to inflation, Andy? And at the same time, that happiness level, that's the most worrisome, because I remember you talking about Chewy for years on the show. and that's always been the leader out there. Are those the concerning things going into earnings?
Yeah, absolutely. And I think there's also just this natural tendency for a consumer or for a pet owner to kind of cut out the fluff, right? Some of Chewy's highest margin items are plastic or rubber toys or treats that have really high margins that you buy when times are good, but when times are tough, you know, sometimes little Snoopy's going to have to just go with his food this month, and that's the lowest margin item they have, the most expensive to ship. So I think that's the tough part of thing for Chewy, and they're just in a tough spot, I think, with the consumer and with Wall Street. That said, expectations are really low. The short interest is really high, so there's always risk to the upside, but we think Chewy probably moves lower after earnings.
Andy, is there also something to it where, you know, one, toys have a shelf life, right? Like they last for a little bit. I'm no longer allowed to buy toys because we have so many. They're overflowing out of the basket. But when we first got the pet, we were buying them all the time. Every time I go to the pet store, I get the toy. Does it sort of like drop off a cliff after you had the dog for a couple of years? You're like, hey, it's your birthday, we'll get you some toys. Looks like this one looks cool, but it's not every time. And that's got to negatively impact Chewy as well if there's not as much pet ownership trends that are favorable too.
Yeah, you know, I hadn't thought of that. I think that's a really good point. When you look at the boom that happened in 2020, 2021 in terms of pet ownership, everybody had that brand new pet that they wanted to, you know, spoil and indulge, and they had a little money coming in, whether it was from the government or otherwise. Now both of those things, you know, the dog's gotten a little older, lays around a little more, is a little less energetic. Maybe you're not so excited to buy them a $7.99 rubber toy this time. They can just do with some crumbs off the table for their birthday.
Well, I'll tell you, my dog Murph gets anything he wants and new toys.
Yeah.
Every time.
I need to go to wherever the $7.99 toys are, because then maybe I'm allowed to get them again.
Yeah, that's Chicago taxes. All right, Andy, so you're pretty negative on this one, but you mentioned the short interest, so that would be maybe the caveat that, hey, if they announce maybe they're cutting costs, or maybe that short interest and, you know, an inline or guidance higher could actually lift this stock, right?
Yeah, I think the bar is very low. Look, we expect everything to be pretty negative, but the bar is very low. The stock is down. The short interest is high. So I think if we're going to make a bearish bet, you know, I would look to you guys to help us figure out how to do that in a very risk-defined way.
Yep. All right. Great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right. That's Andy Swan, co-founder at LikeFolio, breaking down the negative sentiment. I always look at this, Alex, if you look at the price action of the stock.